Welcome to Pressure Points. Our topic is Meta earnings. And as of this recording, which is an hour after the conference call ended, shares are down 3%, which are at their session lows. I think that the reason why they're down is essentially there's a high bar going into the quarter. That doesn't change. That the substance of what they're doing continues to be on track, which is aggressively pursue AI to try to find new ways to keep their business sustainable and new growth opportunities outside of what they're doing today. And so I'll jump into the pressure point. We've previewed this as well. This was all about top line growth. It came in slightly ahead of expectations for the September quarter, up 19% year over year. The street was at 18%. The all-important guidance, you have to look at the high end of their guidance range because typically that's where they come in, implies 20% year-over-year growth for December. And so we're essentially seeing a fractional acceleration in growth from the 19% in September to about 20% in December. One of the reasons that's happening is that their daily active users continues to grow. That creates more shots on goal. And also they're using more AI, better targeting to improve engagement and new tools for advertisers. So kind of the symphony of all these results in revenue growth that is most respectable. Compare that to where Microsoft was growing at, call it 14%. Google grew their search business at 12% last quarter. This 20% growth expectation for December does justify, or at least give some light of why the stock has done so well over the past 3 months. It's up 20% if you factor in the 3% that it's down in the after hours over those past 3 months. As a point of comparison, the NASDAQ is up just over 5%, and the rest of the Mag 7 is up around 7%. And so that is this core testimony to the core revenue growth continues to be impressive. The second piece below the pressure point is just related to how they're going to be spending. Of course, the CapEx question gets, I think, more attention than it should, but here we are. If you take their CapEx guidance and assume that they're going to come in at the high end of that, which isn't necessarily going to be the case, but let's say they do come in at the high end of their CapEx guidance for the December quarter, that implies that CapEx will be up about 87% year over year in the December quarter. That falls under the category of what they've talked about, which is aggressive investment in infrastructure. As a point of comparison, Google last night guided their CapEx to be up 19% in the December quarter. That's year over year. And so you just really see this much bigger gap in terms of how aggressively Meta is going after CapEx. The absolute numbers are pretty close. I mean, Google is kind of in that 14 billion range, and Meta is going to be right around that same number, I think, for the December quarter. And so what the takeaway here is that Zuckerberg referred to this as a pivotal moment and one of the most exciting things that the company has ever, opportunities ever in front of it. And he's clearly taking their long-term, move fast and break things type of approach to what they're doing in infrastructure. This begs the question of what does an aggressive investment in infrastructure, not only CapEx, but people mean for profitability? And the question came up in several flavors during the conference call. CFO Susan Li had this commentary regarding they want to continue to invest in what they see as being their strategic opportunities, but also see other efficiencies that kind of offset that. I think when you put those two together, you could kind of come up with a view that means that they're going to continue to maintain or improve margins. You could also think of this as if there are bigger strategic opportunities that come up, maybe margins drift a little bit. But either way, don't expect any sort of seismic change in terms of the directions of where margins are going over the next year, just a continued aggressive investment in infrastructure. Absolutely the right thing for the company to do, to be pursuing. The third topic is something that often falls off of people's radar, but I think it is worth mentioning, and that is the daily active people number. It was 3.29 billion. I am specific here because by definition, this is daily active people. By definition, it missed the street estimates of 3.31 billion, but it's still up 5% year over year, and still an incredible number when you put into context that basically half of the world's internet population use a Meta property daily. And that is one hard bar to grow from. Huge, difficult in terms of talk about the mother of all difficult comps, 3.5 billion daily active users, 3.3 billion is that hard comp. a year ago, in March 23 quarter, more than a year ago, they grew that number at 5%. More recently, it's been growing at like 7%, but still maintaining this 5% growth. I think just maintaining this number would be a win, but the fact that they continue to grow it at a nice pace is testimony to just how addictive their products are. And ultimately, one of the reasons why all this investment in AI should yield a return, a nice return, specifically because they've got such a big base to inject these products. That's how they can get Meta AI to the 500 million monthly active users they have today. They expect by the end of the year to be the most used generative chat bot. They can do that because they can insert it into that massive daily active population. And so that is kind of the below the fold, but definitely something to keep an eye on. Then I'm going to conclude and talk a little bit about the toy department. One of the themes on the call was give me some substance about how you see AI having a real impact on your business. And they talked about some of the targeting, some of the advertising tools, improving conversion by 7%. But they also kept orbiting back around this topic around the amount of engagement that Meta AI has had, and they're referring to as searches within it. But eventually, they could see that as an opportunity to monetize, basically create some form of a search business. And I would put this in the same category of how Tesla thinks about Optimus. It's a long way down the road. It's probably in the category of still less than more likely. But if it is something that does happen, it will be a topic that investors get more behind. And you could see some material changes to the numbers down the road, 2-3 years down the road. I want to give a final call out to Mark Mahaney. The final question on the conference call, he asked just about difficult comps, and is there any kind of gotcha moments coming up here in the comps? Because we had the Olympics more recently and the elections and that impact, and basically, do analysts need to be and investors need to be thinking about much lower growth rates next year because they've had this benefit more recently? And Susan Lee's response was no, yes, they have some impact, but it's not going to be material, and don't think of it one way or the other. They still believe that the global advertising market's in a good place, which should bode well for back to that pressure point, top line growth. So as Deepwater investors in Meta, we continue to believe that they've got that base where they can insert some of these AI products for both advertisers and users. And we think that that's going to lead to growth at rates that are higher than what most people think for the next couple of years. On behalf of Pressure Points, I'm Gene. Bye for now.